Hello, everyone. My name is William Mucker. I'm a client executive with Camaplan, and I would like to thank you for joining us for today's webinar, Payroll Traps to Avoid for Business Owners and Investors in Business, with Charles Reed, founder of Get Payroll. I'd also like to thank you, Charles, for joining us today.
My pleasure.
Thank you. As a quick note, please be aware that Charles will be answering questions at the end of the presentation. However, feel free to use the Q&A function on your screen, not the chat, to pose your questions whenever they cross your mind. They will be saved and addressed once the presentation portion ends and the Q&A portion begins. Before we get started, we have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of that dialogue with your team of professionals to ensure that the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any product. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information of self-direction have any questions, feel free to reach out to me. I'll be more than happy to help. And then without further ado, I'll pass the controls over to you, Charles.
Will, thank you very much. Let's get this up. Okay, I'm Charles Reed. I'm a CPA, U.S. Tax Court practitioner, founder of Get Payroll. I've been in the payroll business for over 30 years, and it's kind of my life now. So, complacency is probably one of the biggest problems at the moment. The IRS is getting 87,000 new agents, many of which will be armed. If you've been lax in your oversight of payroll and payroll compliance in any of your investments or businesses, it's about to get real dangerous. These agents are not going after billionaires who have armies of CPAs and attorneys to make sure everything is right. They're going after small business. Audits are going to rise substantially, both business and personal. Now we'll go through some of the areas that, as an investor in any kind of business or situation that has payroll, you need to be aware of. Business entity classification. There's four basic entities for payroll purposes. The disadvantaged entities are a sole proprietor or a partnership. These lack a lot of the ability to maneuver things that are for tax advantages. An LLC that's a disregarded entity might as well either be a sole proprietor or a partnership. A C corporation has double taxation and is normally not the best for a small business or investment. Advantaged entities, S corporations. LLCs filing as an S corporation. These are pass-through entities. You can get lower employment tax, lots of deductibility, as well as retain your liability protection. All right, employees versus independent contractors. This is a mistake a lot of small businesses make. And according to the US Department of Labor, 70% of all US businesses have classification problems, either hourly versus salary, exempt versus non-exempt for overtime purposes, or independent contractors versus employees. Now, who is an independent contractor? You don't get to choose. There's a whole body of law that determines whether a person is an independent contractor or an employee. The first major test is 20 common law rules, which the courts have looked at for many, many years. These include such things as, can the contractor substitute another person to do the work? Are they required to attend your training? Then they're probably employees. Do they hire and train their own assistants? Do they have expertise and maybe a license outside of what you've given them? And is the payment by the job, not by the hour? Now, the IRS has some additional rules which they try to apply, and they deal with control, behavioral control, financial control, and the relationship of the parties. Now, failure to classify people properly can lead to huge penalties and demand for taxes that weren't paid, demand for back overtime, and all kinds of problems, including interest on those penalties. There's a new rule about independent contractors that's going to be issued tomorrow, which will be the 13th of October by the Biden administration after they canceled the proposed Trump administration rule last March after they took office. Now, the Labor Department is run by a ex-union boss. So you could expect that it will be, and the verbiage is that it will be very much structured toward making everybody employees and avoiding contractors wherever possible. Next slide. Taxes. Besides federal taxes, you have, well, in federal taxes, you have withholding, Social Security, Medicare, and federal unemployment at a minimum. Now, most states will have both withholding and unemployment. Several have disability funds now, which you have to pay into, and it's a growing trend. There may be local taxes as well, city taxes, transit tax, school district tax, and more. There are over 15,000 taxing entities for employment tax purposes in the US alone. Every unpaid, slow paid, unreported, or late reported tax has penalties and interest. The IRS alone in fiscal 2019, before COVID hit, levied $13 billion in employment tax penalties. Now, many were due to IRS errors. The IRS makes millions of errors every year, many egregious ones. Many were due to simple mistakes by employers, which don't rise to the level of penalties, but they were penalized anyway. Now, a lot of these were abated, were reversed by people who know what they're doing. So if you know what you're doing, great. If you don't, and you get a penalty, get somebody who does, see if it can be abated. Next slide. All right. Payroll laws. The main federal payroll law is the Fair Labor Standards Act. This covers a lot of the payroll requirements, but not all. Now, you are only subject to FLSA if you are in interstate commerce. However, the US Labor Department considers everybody in interstate commerce unless you can prove otherwise. So their presumption is you're going to be in interstate commerce and they're going to treat you that way. Now, the states have a lot of laws as well. And if they are more advantageous to the employee than federal law, minimum wage is one, time off, breaks, and so on, then the state law takes precedence over the federal law in employment law, as opposed to the reverse in many other cases. So you have to not only know the federal law, but you have to know the state law in the state that you're operating in. Some states allow municipalities to set minimum wages. California is one of those. Cities set minimum wages, and they do it capriciously. Now, Texas, for instance, does not allow cities to do that. Texas has a state minimum wage, and that's it. It also happens to be the federal minimum wage. Another area you have to look at is child labor laws. Child labor laws vary from state to state. There are federal ones as well. Basically, if you employ anybody under 18, including a family member, you need to be aware of this. So anytime your investment has families, children, workers, you need to be aware of all these things. Now, Family Medical Leave Act, which we've probably all heard about, comes into effect when you have 50 or more full-time equivalents. You'll have to be aware of that. However, 45S is a tax credit for FMLA, Family Medical Leave Act, type time off. And if you have that time off for employees, you can get a tax credit for up to 25% of what you paid them. Now, there are some restrictions, but it is something to look at if you have people and give them paid time off. New hire reporting. New hire reporting is to make sure that child support orders get picked up and laid on to employees who have child support payments to make when they go to a new employer. A number of states have now added independent contractors to the new hire reporting requirements. So if you hire an independent contractor and you're in one of those states, and those states are expanding every year, you will have to file a new hire report on that independent contractor. And if he has a child support order out, the employer will be notified of it and will have to make withholdings for child support from those independent contractor payments. Labor law posters. Labor law posters are required both at the federal and state level, and you should have them posted in a prominent area of the business. However, in the 50 years I've been in business and the 30 years plus I've been in the payroll business, I have yet to see a labor law poster on it. So be aware of it, but it's not a huge concern. Employee handbooks. An employee handbook is literally a contract between the employer and the employees. And they're really a good idea. I would say they should be required. It's going to save you from such things as wrongful termination lawsuits. So you have an employee handbook, you give it to every new employee, and they sign that they have received, read, and understand that handbook. And you file that acknowledgement in their personnel file, so you have it for later on. And anytime you update the handbook, you get a new acknowledgement from them. That's just a smart thing to do. So if it ever comes down to, well, I didn't know, well, yeah, you said you did. So the CYA. Now, some of the things you want to include in the handbook: company values, roles and responsibilities, standards of conduct, employment policies, pay policies, including such things as vacation pay, sick pay, jury duty pay, paid time off, and others. The fact that you comply with all the federal and state laws, that you're an equal opportunity employer and have non-discrimination policies, your FMLA policies, sexual harassment policies, workers' compensation policies, termination policies, drug policies, and a lot more. If you need to write one, there is software out there that's relatively inexpensive that will give you all the layout and the various options of policies to include, as well as people like us who help our clients do that. So all that and a lot more. Record keeping. You have to keep different pieces of paper and different records for payroll and HR systems for different agencies, both federal and state. This starts with your job advertisements. You need to keep what you advertised, what resumes you got, what you did with them, and keep them all. And you have to go through the whole process up through termination and final check and everything else. Now, the departments include the IRS, the Department of Labor, which handles FMLA, Title VII disability and civil rights, age discrimination, Immigration Reform and Control Act, plus all your state agencies. Now, I have some very simple advice. Keep everything forever. That way you have it, and when they come ask you for it. And I had a client that was accused of some things. The IRS came in and they wanted 10 years of detailed payroll records. and 10 years of accounting records and 10 years of vendor payments. And we had it all. So in the end, it all went away. But if you don't have it, the IRS is going to assume that you're in the wrong, and they're going to penalize you there. One of the things you'll encounter is PEOs. If you're not aware of them, PEO is a professional employment organization. It used to be staff leasing. And after all the scandals in the industry, they changed their name because staff leasing had become synonymous with basically organized crime. Sounds great. It's easy. It's all inclusive, supposedly better insurance, one-stop shop, on and on and on. However, they can be extremely expensive. All of what they provide can be gotten a lot cheaper and put together by someone who's willing to take a little effort. In addition, a lot of things they say they will do, they don't do. They say they will, but when it comes down to it, remember, when Sally's upset because her boyfriend left her, she's not going to go cry on the PEO's shoulder. She's going to go cry on yours. We had a client that the organization was owned by a bunch of doctors. And one of the doctor's golfing buddy turned out to be a PEO salesman. So he talked to the doctor and said, well, you need to be a PEO, and told the good story. And so the doctor went to the administrator of the organization, which we provided payroll services to, and said, hey, look at this. So Joanne, who was the administrator, and I did a whole workup on it. And it came down to, it would cost the organization an extra $300,000 a year for that 150-person payroll. Needless to say, the organization did not go to the PEO, and the doctor got himself a new golfing buddy. Here's one that you may not be aware of, and that's this cheat. Those uncashed checks, you don't get to keep the money. If you paid someone, an employee or a vendor, and that check never gets cashed, that has to be reported, and that money has to be sent to the state. And you don't have a choice. Each state, every state has laws, and each state laws are different in the timing. Some of the states, if it's very small, like under $25, you don't have to report it. But some states, if it's $1, you have to report it. Again, we'd had a client that was a medical practice, and they had lots of refund checks after the insurance all settled that they'd send out to their patients, and a lot of them never got cashed. And I said to the administrator one day, when was the last time you reported all those to the state? And she said, what? I said, do you have to report those to the state for a cheat and send it to the state of Texas? She said, what? So we got her lawyer involved and got with the state, and they agreed that if the practice would send in the last 3 years of his cheat, they'd forego the other 25 years. So she did, and after that, she kept up with things. Okay, laws based on the number of employees. Some of them start out with one. If you have one employee, you're subject to FLSA, withholding, Social Security, posters, and more. At 11 employees, OSHA kicks in. At 15, ADA, genetic information non-discrimination. Title VII, civil rights. At 25 employees, age discrimination and COBRA. At 50, FMLA, Affordable Care Act, affirmative action. At 100, worker adjustment and retraining. You can't close a plant and just fire everybody. You got to see they get another job. And EEO survey forms. If you have a federal contract, you have Davis-Bacon, which is basically you have to pay union wages regardless, and a bunch of other stuff. So you need to know all the laws based on the number of employees that you have. Okay, thanks for listening. We'll take questions now, of course, but I do want to offer something to anybody who's listening. If they would like a copy of my book, The Payroll Book, a guide for small business and payroll, Small business and startups, Lord. Can't even give my own book name. The Payroll Book, a guide for small businesses and startups. It's basically 30 years of wisdom distilled down to 95,000 words. Everything I've spoken of and a lot more is in there. We'd love to offer you a free book. If you will just go to the payrollbook.com, enter the discount code webinar, we will send you a free book, no shipping, no handling, for your pleasure as long as supplies last. So, Will, are there any questions out there?
So at the moment, we don't have any questions. I have a question of my own. As an investor, are there any questions that you should think of before going in with an investor, or even any questions that you should think of regarding payroll for an investment that may already be you're active in?
Well, that's the things we went through. Basically, you need to be aware of what goes on with payroll and make sure that they are compliant. A lot of businesses aren't, particularly on such things as classification, state taxes, new hire reporting. And new hire reporting is really one that'll bite you in the butt. If you haven't reported those employees and they have child support, all that unpaid child support, you're going to have to pay out of your own pocket. The business is going to have to pay it, whether the employee is there or not. So anything you didn't collect from the employee that should have been paid in, they'll go after the employer for. So there's a lot of traps, and you need to do your due diligence if they have payroll. And we've gone through a number of things, but make sure that people are properly classified, know what the entity is, know that they're following the laws, know that they're filing everything. You would be amazed how many small businesses don't file and pay taxes and end up in deep trouble with the Internal Revenue Service in the states. So do your due diligence in regards to that payroll.
Thank you. And just want to remind everybody to use the Q&A function for any questions that they can think of. Or do you know if there are any protections for just an investor in business for a business that they may not have known is not following these rules correctly?
If they don't have the ability to write the check as the investor, then they're not what's called a person of interest, a responsible party. If the taxes aren't paid, every person who can sign that check and pay those taxes, the IRS will go after for the unpaid taxes, which are not dischargeable in bankruptcy. Anything you collected from an employee that was not paid in, any withholding, Social Security, that the employer didn't pay in, the responsible parties at that business can be sued by the IRS and will be for that money. They'll be sued, they'll all be sued individually and try to collect from everybody. And they're not going to parcel out their turn to try and collect the whole thing from everybody. As an investor, if you don't have the ability to pay those taxes, write that check, then you're not personally liable. If you have the ability to write a check in that business, even to yourself for your share of the profits, you're a responsible party and they will sue you for unpaid payroll taxes, unpaid withholding.
Okay, great. Thank you. So we have two questions right now. The first question is from Steven. He wants you to, if you could, repeat the URL and the code for the book offer.
Thepayrollbook.com, www.thepayrollbook.com. The discount code will be webinar. It'll be active in about 10 minutes.
Perfect. Thank you. This kind of could be a question for either of us, but I'll start off with you if you have any answers in specific. If you invest into a business using your IRA, do you have to get a CPA who knows all the rules of IRAs, like UBIT, LLC versus S Corp? And how many CPAs know this, and how can you vet them?
The idea of what that entity is and how it's being taxed should be something that every CPA is aware of and can advise you on. However, some CPAs, your guy next door that works for Price Waterhouse may be working on international audits for major international companies and doesn't really know it. So if you're going to deal with a CPA, deal with somebody who deals with small businesses. They will know the difference between an S Corp and a C Corp and LLC and what the advantages are and so on. So deal with somebody who deals with your type of businesses. As far as the IRA details, that's probably more for you.
Thank you. So yes, for UBIT and UDFI, there are CPAs that may be more familiar with these taxes as it applies to IRAs. There are a list of references on our websites of CPAs that clients have used in the past. But it would be a good question beforehand to gauge your CPA's knowledge before you decide to go with them, especially if you're specifically looking for assistance with IRAs. Any other questions? I'll give another minute for questions coming in, last minute questions. And any parting notes for you at the moment, Charles, before we wrap up?
Well, I'll reiterate due diligence as an investor myself. I'm always cautious about investments, and one, as a CPA, I'm a professional nitpicker. So due diligence is kind of second nature to me, but it's something that you need to look at. And now you have some of the tools to analyze the payroll portion of that and ask a lot of questions.
Perfect. So I don't see any questions coming in. If you do think of a question involving payroll or anything about Charles's book, please feel free to reach out to him at the contact information on your screen. And as always, if you have any questions about your self-directed IRA, or if you're thinking about getting into self-direction, you can always get more information at camaplan.com or reach out to us at the contact information provided earlier. And I want to thank everybody for joining. I want to thank you, Charles, for all the great information you provided us today. And I hope everybody has a great rest of their afternoon.